Those who are self-employed may realize that it's harder to get a mortgage, and we understand this because we're self-employed as well. We help thousands of self-employed individuals narrow down their mortgage options. Now, based on what type of self-employed you are, will determine what route might make the most sense for you. There are basically 3 avenues for those who are self-employed. There's the first option, which is insured purchase, so those who are self-employed and putting less than 20% down. For those clients, they can do under the stated income program. This is for those who are self-employed but do not declare enough income on their personal taxes. They can buy with as little as 10% down. Now, there's a reasonability factor based on the industry you're in, how long you've been in it, and to determine how much income we can use. For those buying with less than 20% down, the insured purchase, the stated income program, at least 5% must be from your own resources. The other 5% or more can be gifted from an immediate family member, but at least 5% must be from your own resources. You must have good credit as well for this program. This can be done through any of the major banks, any of the Schedule A lenders, and so you still get best rates and best options. There's a bit of a premium to your high ratio insurance premium for those doing stated income, but it's still a great way to buy with less than 20% down, and you don't even have the confirmable income to qualify. As long as you have strong business, gross income, good credit, you're good to go. The second option for those who are self-employed are for those who are incorporated. If you've been incorporated for at least 2 years or longer, we can get you an approval with an A lender, so major banks, Schedule A lenders, with looking at your personal income plus the net income in your corporation. This is a great option for those who maybe leave income within their corporation, which makes sense from a tax perspective. So what the lenders are going to look at, we're going to look at how much you personally declare, whether that's from T4A, dividend income, whatever that combination is. We'll take that income, last 2-year average, plus the net income in your corporation after taxes minus dividends. This is a great option that can significantly increase the income we can use, assuming you have strong corporate financials. The documentation we're going to need for this, most importantly, articles of incorporation, business financials for the last 2 years, personal T1 generals for the last 2 years, and your taxes must be up to date. For this option, you must have at least 20% down payment. So that can be coming from your own savings, investments, or even your corporation. This is another great way for those who are incorporated, have strong business financials, and they can buy with A lending, so best rates and products, no fees, using corporate income. The third option, also a great option as well, is for those who are self-employed. Maybe they have good credit, maybe they don't, but they're not necessarily incorporated, or maybe they are incorporated. You can be working for less than a year in the business as well. This is alternative lending, or B lending as they call it. A great option where the lenders for this product can look at your business bank account and or invoices to look at the last 6 to 12 months. We can annualize the deposits into your bank account and use that as qualifying. So you could maybe have confirmable income of $10,000, $20,000 a year personal. It doesn't even matter, we're not looking at that. For B lending or alternative lending, what's most important is the business income into your bank account, your business bank account, and your invoices. We can look at the last 6 to 12 months and annualize that income and get qualified for the mortgage based on that. Now, of course, the requirements are easier. You don't necessarily have to have taxes up to date, less documentation required. So the cost is a little bit higher for the mortgage. But if you're saving $10,000, $50,000 in taxes, it's a no-brainer in my opinion. You're going to pay a small premium on the interest rate, plus a small lender's fee. Now you're getting into a property and buying now. Those are the 3 main options for those who are self-employed, where we can still get financing and buy now.